I would like to start by introducing Ms Jayashree Girisan. She is a chartered accountant, and her career spans across 2 decades in the corporate world and entrepreneurship. She is a seasoned finance and management professional, having worked in KPMG and General Electric in the past. She founded Prema Consulting in 2018. Ms. Girisan provides advisory service on a multitude of domains like IPO listing, business plan valuation, due diligence reviews, and AML. Awarded a Certificate of International Treasury Management by the Association of Corporate Treasurers UK, she also advises on VAT, corporate tax, and ESR. Welcome, Ms. Jayashree.
Thank you, Mr. Bindra, Rajiv, and Chinmaya. So, and Rajiv, you summarized it very well. So you would say start with your risks, policies, and procedures, get your staff trained appropriately, get the compliance officer in place, and finally have the records to show that you have done the necessary due diligence to keep this business, AML checked. Now, and Rajiv, you addressed a very important aspect that as a business, we can't be, going beyond the possibilities, right, which the screening tool affords, or the risks and policies and procedures. Mr. Bindra had a very good example where even then, despite all these checks, you may not be able to identify, where the money came from. But our sort of, the DNFPB, what they have to, are expected to do is get these things in order so that they can make sure that, they are covering the risks. Thanks, Rajiv. I think we covered that a little earlier when we talked about having the risk policies in place. The key element is, as a DNFPB, which sector are we in? We are accountants, auditors, consultants, doing company formation, etc. Understand where we stand. What kind of customers are we attracting? Which sector? And that decides how you develop your risk policy and procedures. And then the team that you have. Training is very important. And it's there in the, it's been provided in the AML as well, that you have to train, and everybody who comes into your organization, you have to train them. And the right level of training is very important. It could be an ACAM certification as well. And there's, of course, something like a tool is always very helpful, Rajiv. And when we have a tool, it makes our life easy. I mean, you could get all the sanction lists, be it OFAC or UN list, etc., or the UAE terrorist list on an Excel, and conduct the screening. But the expectation from the law and the regulation is it's a daily screening. They're saying if the list is updated, a name has been dropped, or name has been added, you're expected to screen all your customers again. So how practical is it to do that? A tool is handy in that case, so we make sure we do that. And finally, having a compliance officer as well. There is a lot of discretion involved as well, so to understand the customer is very key. How does he make the money? If he's coming, a lot of times we get customers who are new to UAE but have done very well back home from where they are. It could be UK, it could be some GCC country. We need to understand how the numbers look, from where they come from, how are they funding the business, etc. So that business knowledge is very key. Understand your customer, understand the kind of CEO, as you mentioned, go to the second level, and you do get a feel of it, because you have been conducting a business, you do get a feel of these things, So some of these things are difficult to put it in black and white, but you need to get a sense of who you're dealing with, and what are some red alerts that you get when you talk to somebody, etc. Rajiv, I hope I addressed what you were saying. So I think we should give a chance to the audience if you have any questions that you would like to ask before we go on to some of the areas we want to cover. And I think, adding to what you said, we would like to say that this was sort of inevitable. The way UAE is heading, it wants to improve its reputation on the international forum and be considered as a financial hub, be across industries, etc. So if you want to achieve that, a regulated and a country which has suitable corresponding reputation would be required, right? And what is also driving is obviously a lot of examples, Mr. Bindra, that you also gave, right? There's a lot of parallel economy money which is, which needs to be countered. So those regulations are also required. It's being almost, there's no choice really. Thank you, Rajiv. And correlating it to that, it's back to basics. Just one point I would like to highlight here when it comes to virtual assets is that it is complicated. Like Chinmay also said, it is complicated. There's a bit of, areas which we are not very sure about how or why, and especially when we say virtual assets, there are several categories of it, so we need to understand what is it exactly what they're doing in the virtual asset space. Are they raising a token, or are they dealing or taking payments in virtual assets? So it comes down to also, it may be worthwhile when you are dealing, and you will see that increasingly happen because Dubai and UAE are, very aggressively courting virtual asset businesses. And in fact, as you mentioned, there's VARA that's come about. So the virtual asset regulation, even that will help us in this process. So because VARA is also aware of the FATF regulations. So the point being that we also need to increase our understanding of this sector and go back to also the basics, which is where is the source of the funding. Sorry, there's a question in the audience.
Okay, my name.
So I think, so it comes back to what Mr. Bindra said, your risk appetite. What is your risk appetite, as you being your business's risk appetite now to carry on with this client? If you're getting good information, because bank can be quite opaque in why they took the decision, so you may not know. Even the client may be completely, in the green, but he doesn't know why his account has been frozen. So he could be completely innocent, but the bank has its reasons for having frozen it. So it is for your sort of due diligence. It could be enhanced due diligence that's conducted. So with that, we'll conclude the Q&A session. And just to conclude on our discussion as well, that I think the essence is that we go back to basics, follow the due diligence in terms of having risks, policies, training, compliance officer, training, screening tool if required, etc. Then I think we ensure as a DNFPB or as an FI, we are doing the necessary actions. We can't uncover all the way back to what happened 10 years, 20 years back, but we can do the basic checks from our end. That's what is expected and that's what is required.